So my name is Carmen. I'm the founder of Cocoa Ventures. At Cocoa, we are VCs turned angels and become the in-house VC for founders. So basically, we're a pre-seed seed generalist fund investing into European founders. Very good question. I actually think we're at a point where a lot of things are going to change, because if you think about it from a macro perspective, now with interest rates much higher than they used to be, there are lots of other assets that are returning like higher yields with lower risk and much more liquidity. And in venture, we are asking investors to lock in their money for 10 plus years with very high risk, and therefore the returns that I think are going to be expected from the industry in order to allocate capital are going to be much higher. So I think that's one at a macro level. And there's obviously AI, and I like to say that I am highly confused by the situation right now as an investor. It feels a little bit like a dust storm. It's hard to see, but for sure things are going to change. And one interesting hypothesis to kind of consider or play around with is the fact that the costs of starting a company are gonna dramatically decrease. And it's true that maybe many more companies will be created, so that might compensate, but there's a question at pre-seed seed of how much capital is gonna be needed to that initial phase of like product development up until founders have early signs of product market fit and can therefore start spending in go-to-market, which they'll continue needing money for. And so I think that there are lots of uncertainties around how venture will look in the next few years right now. And our approach to it from Cocoa is we definitely don't know what's going to happen, but we like the fact that, or we like to be small and remain small, because fundamentally we believe whatever the market brings at like a macro, at a tech level, it's going to require imagination and flexibility to navigate it. And the smaller you are, the more flexibility you have. So it's very also interesting because, to the point, I think like in the past few years, how venture has evolved is like growing AUM, lots of money has gone into venture because it was really hard to make any money in other more traditional financial assets. And so that has led to like much larger funds and much more money being invested, right? Again, how that is gonna play out now in a higher interest rate environment and with AI, it's TBC. But the certainty is, I think things are going to change. I don't necessarily know how they're going to change, but I think the venture that we will have in the next few years will be very different. Like when we look back 5-7 years from now, it'll be very different than what we're seeing now. I think I think one of the challenges, taking a step back, especially of European venture, is that most of us haven't lived through a real downturn, right? So we actually, like, it's our first downturn. And I think we're lucky that there are a few people who have and who are like generous enough to kind of share their insights with us. But at the end of the day, I think it's going to be a challenge to the ecosystem, because we don't have sort of references or kind of history that we have experienced to look back and manage. Tips to navigate it, I think from a fund model perspective, we're big believers that staying small allows you to be much more flexible, have much more imagination to navigate whatever the market brings. So obviously if you're already large, it's hard to become small. But if you're starting now, and there are lots of micro funds and new emerging managers starting, I really think that being small has its downsides, obviously, but in times of high uncertainty, also in what refers to the VC model as like such, it's actually quite helpful. The second one, when it comes down to actually investing and like the core and ultimate reason why we all are here, I think is again going back to first principles and working very closely with founders, supporting founders. This is a people's business, people's art. It's the founders and the people we back and support who will make your reputation a macro side. That's why we do what we do, and the focus that I think the harder the times, the more like we should be there to support founders. Because when times like become more certain or become a bit like more bullish, that will certainly help. And ultimately, in a more like, those are very kind of rational reasons, in a more like emotional part of the framework, and I say this a lot, is in venture, this is finance, but we are investing into people's life projects, and when things are rough, it is their life that is at stake. And by the way, life projects might mean families and my mortgages and jobs, and they're putting it all on the line, right? So I think that the harder the times, the more we need to be there to support, even if from a time allocation and ROI, it might not make the most sense. I think it is when we, really need to stand up to it. And I'm a firm believer that it will have a high ROI in the future when things get better. But I think it's very different to invest into people's life projects than it is to trade bonds or buy equities in the public markets. And so I think we should be mindful of that. In terms of companies that I invest in, trends, so I like to say I have no morals. I'm a total generalist. I follow founders. I have typically my investment kind of processes works that I meet exceptional founders. They present me with like pain points they're solving, and then I go deeper into markets and build theses, but it's very kind of like bottom up and driven. So my last two investments, one is in space tech, which I'm really passionate about because of the founders sort of have got me very passionate about. But and the other one is in like DevOps embedded software. If I actually take a step back to my very generalist approach, I'm very excited about data infra. I believe that pre-AI was about insights, but also now with AI and the output of AI, that output is only as valuable as the quality of your input. And when you think about it at a company level, there's a lot of work that needs to be done in having better data at companies, better quality data, storing it in a better way, in a more comprehensive way, more action, and the whole kind of infrastructure of like storing the data, transforming the data, streaming the data. So I'm very passionate about that because I think it's kind of, the real anchor of a lot of everything else that is being built on top. And then I have a thing for very unsexy, specialized industries. So I made an investment into steel making. I like embedded software, like all these areas of the economy that are very, very difficult to actually understand, that need an expertise because they're very complex and that are overlooked and have been overlooked traditionally by software. I think there are great opportunities there because in a lot of the areas that we're more used to that are hotter, like there are already huge big incumbents that are gonna go after them and increase their kind of hold of it, versus all these other ones where you have no incumbents and there's a barrier of entry because it needs highly specialized teams. So not anybody can go target that market. So if you find founders who have a passion for those industries and a deep understanding of those industries, I think the opportunities are huge.